Welcome back everybody, good to see you again. Nathan here, and this is quite a special weekly update, and that's because it's now July, so that means we've got the first half of the year to analyze, and we can take a look at all the different asset classes, stocks, bonds, gold, silver, and we can see how they've performed years to date. So in this episode, we're going to look at some stock market news, some overall market news, gold and silver news, cryptocurrency news. So it's a really good episode. But before we start, just one thing. Cheers. Bella Italia owner falls into administration with loss of 1,900 jobs. Essentia to cut 900 UK jobs as pandemic hits demand. 1 in 6 jobs to go as BBC cuts 450 staff from regional programs. John Lewis set to axe jobs, cancel bonus and close shops under new restructuring plans. So the overall news this week on the jobs front isn't that positive. However, time for the good stuff. Let's have a look at how all the assets have performed year to date. So this is the annual performance of the major asset classes so far this year. So for the first half of this year, how has your portfolio weathered? We are starting with the top performers and going to work our way down to the low performers. So who is winning so far? It is the cryptocurrency market. The cryptocurrency market on a whole is 35% up. Next, as it's the market leader, we're going to cover it, and it's Bitcoin. Bitcoin is coming in second place, up 26% for the year. I bet all those major hedge funds wish they were now getting involved in Bitcoin. Next is gold. So gold is doing really well and has grown 17% year to date. Next up is bonds. So we look at the Treasury Index. So it's an index fund of the treasuries, and it's up year to date 8%. So as people get scared when the market goes down, they tend to flock to safe havens, and bonds is one of those. Next up is silver. Not as good as gold, but it's just turned positive, had a strong week this week, and it's now up 1% for the year. Next, we have the S&P. So we look at the S&P 500 as it's the top 500 stocks in the American stock market. And it's down, so we now go negative. American stocks are down 3%. And I pretty much look at the American market because it's the global leader. So instead of having to hunt around and look at the stocks of all the different countries, if we just take the market leader, which is America, it's the biggest economy, that is why we use the S&P, and it's down 3%. Next, cash. So if you are holding cash, I add cash, put it as a negative 3% because that's how much money is losing approximately each year. So holding on to cash is your negative return of 3. And the biggest loser year to date is commodities. So I've added commodities in, and again, I've gone for a commodities index. So it covers lots of different commodities in energy, in some precious metals, in livestock, wheat, grain, all that kind of stuff. So it's a full index of commodities, and it's the biggest loser. Look at that, down 24%. So before we go to the market overviews, I just want to talk about one thing, and that is what I think the Federal Reserve is doing. So obviously you've probably heard by now all the money printing going on. So all the central banks around the world are printing money, printing money, printing money, printing money. So I just want to talk about why I think this is happening. And it's to do with something called the wealth effect. So essentially we need to know what an economy is. So an economy in its most basic sense is just transactions. It's the millions of people every day just buying and selling things. So when people are buying and selling coffee, there is a coffee market. When people buy and sell phones, there becomes a phone market. And an economy is basically all these transactions going on all together in one place. And it's these transactions that create all the income. So as soon as someone spends some money, that's income for somebody else. And then just multiply that out, and that is basically what an economy is. So obviously right now with the pandemic going on, everybody's kind of staying at home and they're not spending. So people are kind of holding on to their money and they're saving, and they're a bit fearful about wanting to spend money. So this is terrible for the economy because people are not spending. And remember, that's where all the money comes from. So essentially what the central banks are doing, instead of letting everything crash, they are printing all this money. They're buying everything they can to stop the economy crashing, and it creates something called the wealth effect. So if everybody's holding on to the money and if they're looking out at the marketplace but nothing's crashing and everything seems okay, then they're going to feel better and more confident and begin spending their money again. That is essentially what the wealth effect is. It's you print all the money, you buy all the assets, you stop things crashing, people feel more comfortable, and it's a self-fulfilling prophecy, and it then creates more wealth. Okay, time to look at some of the markets, some of the key things that have happened across the markets. Let's take a look. Starting with the gold market, we've got some very interesting things happening with China and Russia. Okay, so what are we looking at? Well, this is change in gold reserves of emerging countries. So essentially, we have the emerging countries, and it's how much gold do they have in reserve? How much gold do they own? And the first column is how much they owned 10 years ago. And the second column is how much they own today. So there's two key things that I want to point out. So we can see it's to do with Russia and China. So this is how much gold Russia held 10 years ago, and look at what has happened in the last 10 years. Russia has been buying an enormous amount of gold. So this is tons. So 10 years ago they had 500 tons, and now they've quadrupled to over 2,000 tons. And the second one is obviously China, very similar picture. So this is how much gold China held about 10 years ago, and this is how much gold China owns today. Again, for the last 10 years, they've been buying and buying and buying. So something very interesting is going on. What do Russia and China know? I mean, as we can see, gold has gone up for the last 20 years, been one of the best performers. I actually just released a video yesterday on how to invest in gold. So if you haven't seen that, be sure to look at that. But something is going on here, guys. So let's keep paying attention to this. And for the first time, we're going to look at some commodities news because they may be breaking into a new cycle. Okay, and the second chart that we are going to look at is the commodities indexed. So the commodities index is, this is the Goldman Sachs Commodities Index, and it's divided by the stock market. So it's divided by the Dow Jones Industrial. And this is a long-term chart. So this goes all the way back to the 1900s. So it goes back a long time. And the commodities index is basically, they add together lots of the commodities. I think there's 24 commodities indexed together. So that includes oil and natural gas. It has gold and silver, some other industrial metals, also includes some livestock and things like coffee, sugar, soy. So it's a great look at all the commodities together and how it's valued against the stock market. So what you can see is that over the last 120 years, things always go between overvalued and undervalued and overvalued and undervalued. And you can see there's this cyclical, repeatable pattern. And the median is the range in between. And this basically tells us what is actually overvalued right now and what's undervalued. So it goes through patterns and periods of time. Stocks will become really overvalued and commodities will become really overvalued and vice versa. So what is this chart telling us? So this is when commodities are really undervalued under this bottom line, and commodities are overvalued at the top. So we're just now going to look at where we are in the cycle. So you can see for the last 10 years, commodities have come right down and it's crashed to almost 100-year low. So this is telling us that commodities are really undervalued right now. On the flip side, it means it's always compared to stocks. So it also means stocks are really overvalued right now. So this indicates that we could be, if things are going to reverse like it always does, it means that stocks have to be coming down and commodities have to be going up. So this bodes well for the precious metals. So keep an eye on gold and silver, because I think in the next 10 years, if things reverse, it indicates stocks are coming down and commodities will be going up. Okay, so we covered a lot this week and I hope you found some of this valuable, some of it interesting. If you did, then be sure to click that like button below. It's just below the video here. That'll be much appreciated. If you want to keep listening to the news, then be sure to subscribe to this channel. And if you got any questions, any comments, just post them below and I'll see you in the next video. All right, cheers guys.